Markets seem to be torn between the economic data and the ongoing developments on the political side. Therefore, the great volatility that we've seen doesn't come as a surprise. However, in the last few days, we have seen signs of a certain optimism among market participants. To talk about this, it is my pleasure to introduce Mr. Stefan Keitel. He is Chief Investment Officer of Credit Suisse. Stefan, as I just said, this optimistic consensus among market participants, is this on the level?
Yes, from my point of view, because when we look at the outcomes of the EU summit end of June and the announcement of Mario Draghi 2 weeks ago, this clearly shows the willingness of the politicians and central bankers to go for the right measures. And yeah, this was definitely valid to calm down the uncertainties at the capital markets. Of course, problems and uncertainties will stay, and yeah, we will be confronted with some event risks in September, but it seems to be the case that the European crisis should be more and more manageable. And it's also interesting to see that discussion who will go for some further requests regarding support from the ESM, the European Stability Mechanism, and the crucial question how big the size of the ESM at the end of the day will be, if it will be sufficient. This discussion now has faded out because that's now the pre-assumption, because that's now I think the wish we all have, and in particular the central bankers, because this was a pre-assumption that they say, okay, if this is the case, then they will come to the markets to support these countries. So all in all, below the line, we think further steps in the right direction, and that's of course valid to see some improvements here, and also I think a rise or an improvement in investor sentiment. Also, when we look into the macroeconomic data, I think that's also, I think, a quite okay-ish picture. Growth in the US is quite reasonable. It's not a strong growth, but it's also not a recession case. When we look into the leading indicators, it now seems to be the case that after a long period of deterioration, they now seem to turn around, and that's positive. Also in the Eurozone, I think when we look at the growth number, they are not further deteriorating. And for the emerging markets, we have more and more the proof that we definitely can talk about a kind of soft landing path. And this in combination with the fact that from a valuation point of view, yeah, equities are quite pretty attractive, and there is a lack of investment alternatives, and I think the majority of market participants still are underinvested. This makes a clear case for more optimism.
European equities have been lagging behind their other developed market counterparts. According to your scenario, there should be room for improvement here.
Yes, definitely. I think when we look back over the last 2, 3, 4 years, European markets, in particular the Eurozone markets, heavily underperformed some other core markets. And there had been strong reason for this, because I think the growth case was, I think, not comparable to other core markets. Then also from an earning and valuation perspective, the numbers had been not so strong, for example, compared to the US. Then the whole Eurozone crisis discussion, of course, weighed on the performance of the European equity markets, but we should not forget that now people get more and more familiar with that Eurozone crisis and all these questions and uncertainties. And also the pricing in factor we should not underestimate, because the majority of all these negative aspects now should be in majority priced in. So we think that in particular also from a valuation point of view on top, that European equities, in particular Eurozone equities, should get more and more attractive.
Perhaps a word on the emerging markets. Would the emerging market equities, would they profit from any resurgence in the risk appetite?
Yeah, that should be the case, because in phases where the pattern changes from risk off to risk on, the more cyclical markets are more and more in favor, and below the line, on average, the emerging markets are more cyclical markets. Of course, not everything is bright in the emerging markets, because when we look into the growth picture, some regions came down visibly with regard to economic growth. But on the other hand, this also could be an advantage, because it opens the door for the central bank banks to come up with some stimulating measures, as for example in China. So all in all, we are quite optimistic further with regard to the emerging market, and that's the reason that we stick to a moderate overweight we have in place in our investment strategy. We should not be too general focused, because when, for example, we look into the main segments, Asia, Latin America and Eastern Europe, I think here we have a more or less neutral view. It makes much more sense to go a bit more granular, because we have clear country preferences. As for example, we are positive for China, for Korea, for Thailand, for Mexico, for Russia and for Turkey, to take some examples to the table. And besides the equity segment, it's also worth to have a look for the emerging market bonds. I think they performed pretty well over the last period, but we think that kind of nice performance should go further. And though you are able to get a nice carry compared to what you get when you invest into the core bond markets across the world, though this makes sense to invest into the emerging markets generally spoken, into the equity space, into the emerging market bond space, and it's also, I think, quite interesting to look at the so-called local emerging market currencies, because after the setback we experienced between March and May, this created now a renewed buying opportunity. So this could be, generally spoken, a nice investment opportunity.
Thank you very much, Stefan, for these comments. And thank you for watching. If you have any questions about what you have just seen or about Credit Suisse in general, please don't hesitate to contact us. And tune in next time. Thank you very much.